Good morning, everybody.
Talking a bunch this morning.
How's everybody doing? We got Judy, who's the sole brave individual going on camera. Thank you, Judy. Come on, Edgar. All right, guys. Good morning. It is 11:03. We're going to be mindful of everyone's time. Welcome. It's just a quick training on an overview of all of our products. We see some new faces on, well, we don't see any faces other than Julie's, Todd, and mine, but we see some new people on the call. So that's exciting. Just a quick rundown. My name is Jason Twiford, your account executive with Orion Lending. I have got Todd on the call with us, who works with me on the team. We are very thankful for your partnership, thankful for your business. It's a pretty open format. We're going to walk through, hey, how are you doing, Arjun? We are going to just give you a quick tour of our products, all of them, which is a lot. Normally, we only focus on a specific program or two. This one, you're getting everything. It's like we're going to be drinking out of a fire hose. So we're going to move quickly. If you have any questions, please feel free to slow us down, ask your questions. We're happy to dive into them, give you more information on anything you'd like. But as we get started, again, thank you for joining us. Let me open it up. Does anyone have any questions before we dive into this process? And a quick overview, a little bit about Todd and my background, the team that we've got at Orion, and then we're going to jump right into products. So questions before we get going? Nope, no questions. Okay. And we'll probably have a few more people that jump on. We had 60 people registered, just a handful that showed up. But you know what? We have found that there is so much value in this, and it really does create opportunities to do a deeper dive with some of our good partners. So if you have questions, like I said, please feel free to ask. So again, my name is Jason Twiford, your account executive with Orion Lending. Todd Pierce on the call here as well. We are collectively your team at Orion. I have been doing wholesale lending for going on 33 years. Todd is well, I'll let Todd tell you his own journey. But nationally ranked by the Scotsman's Guide, number 10 overall producer, number 1 FHA producer in the country. Some of the benefits to working with us: you guys have dedicated underwriting, account management. You get to work with the best that Orion has available. We also allow you to use lender credit to pay your origination fee when you're going borrower paid. Gives you a huge competitive advantage. Fantastic technology, dual AUS. You guys send disclosures out directly. We've got an intuitive pricing engine, AMC selection, where you get to choose from any one of 15 AMCs. We have some great recommendations. And we've got an exceptional marketing studio that allows you to customize personalized marketing collateral for you, for your company, on virtually any program that we've got. We've got open house in, we've everything. So we can dive into that in a little bit more detail. But Todd, give us a couple minutes on your background, and then we'll jump into the products.
Well, hey, sure. I'm really happy to be here. I've been in the business for 29 years myself, so bring a lot of sales experience, structure, help. I am the tech guy for the team. If you need any assistance within STAR or working your deals, please feel free to reach out here. Always available at my desk. If you ever dig my voicemail, please hang up and dial back 10 minutes later.
Okay, guys. Last chance to ask your initial question. Anything, anybody? Okay, so we're going to give you a quick rundown on our programs, strengths, opportunities to really grow your business. And like I said, if you have any questions, please feel free. You can jump in the chat. You can just literally unmute yourself and ask away. So Fannie Mae, like conventional products, we offer Fannie, we offer Freddie, we have no overlays, we follow the guides. There's really not a lot to dig into and unpeel. when it comes to conventional loans. We do offer the average credit score program that does allow you to average credit score when it's a Fannie Mae product when you've got one borrower who is sub 620. So if you've got a 600 and a 700, you average those two, it gives you a 650. It gets priced as a 620. We price all of these as a 620, but it does allow us to offer conventional pricing in a conventional program when you may normally be looking at FHA. And when they're putting more than 20% down, it does give you that added advantage of no mortgage insurance. So that's good. I would say just take a peek at that, keep it in your back pocket. And we're going to transition right into government loans. Government, we are exceptional at FHA and VA. And I will tell you, FHA credit scores down to a 550. We'll do manual underwrites down to a 580. We even offer a no score program for those borrowers that literally have no credit history and no credit score. We can put those together for you. VA, we do credit scores down to a 580. And VA, we're really unique in that we offer everything VA has to offer. So we do VA down to a 580. We'll do manual underwrites down to a 580. On our VA platform, we do allow you to use joint entitlement, where we brought a deal in this morning where it is a borrower who's a veteran. His father is also a veteran that's a non-occupant cosigner that already has a VA loan. But because they each have entitlement, it's considered joint entitlement. We're able to offer 100% financing in that specific situation where we're using a non-occupant cosigner to qualify. But we also allow you to use non-occupant cosigners that are not veterans. And that is unique. And we get people all the time that say you really can't do that, but VA actually does allow it. You can bring in a fiance, you could bring in mom and dad that live out of state. It does require a 12.5% down payment because that non-veteran entity does not have any allocated entitlement, but it is possible. And it does give you a new talking point with your realtors. We honor tax exemptions for veterans. Texas, for example, if you've got a 100% disabled veteran, they're exempt from property taxes. We will actually underwrite your file based on that exemption, which improves your DTI, it improves your residual income. California, which is where a lot of us are located, does allow us to exempt up to $150,000 if you've got a veteran that's 100% disabled. And again, we'll underwrite it based on that at the original underwrite. We will do VA spot approvals effectively, where we not only get a unit approved, but it actually approves the entire complex. We've done that in connection with loans that we've closed. In fact, we just closed one where we did a VA complex approval on a fiance who was coming in, but they were putting 30% down, so it made perfect sense. VA gave them a great opportunity, great loan. Pricing is exceptional on government loans. We have got dedicated VA underwriters on our team that underwrite only our business. So when it comes to your government loans, we give you great alternatives. We've got a tremendous amount of expertise in both FHA and VA, variable income, how we can maximize the qualification for your customer. So you definitely want to keep us in mind when it comes down to your FHA VA borrowers. Any questions on that? Nope. Okay. Like I said, guys, it's going to be a lot of information. We're going to move quickly because we got a lot to get through, but we also want to make it meaningful and really dive into anything that you've got that's pertinent to your situation. Jumping into a NonQM platform, we have all products. We have a 12-month bank statement program, multiple expense options. We can use just a flat percentage. You can provide a letter from the CPA that confirms the expense percentage. But we've got, like I said, multiple options for you. P&L only program, I will tell you, P&L only program is exceptional. A lot of our competitors offer some variation of the profit and loss, but that variation requires bank statements that support the P&L, whether that is bank statements that support gross income or bank statements that support net deposits. They want to see some correlation between some asset and income documentation and the P&L. Our P&L program is P&L only. We don't need any bank statements that support it. We literally qualify based on the P&L. It has to be done by a tax preparer. It can either be your client's CPA, an IRS enrolled agent, a CTEC enrolled or licensed tax preparer. All of those are acceptable. 1099 only program where we will literally use 90% of 1099 income. It's designed for a low expense independent contractor, realtors, loan officers that get 1099 where they don't have heavy expenses. We literally would use 90% of that 1099 income to qualify. And one of our favorites is an asset depletion program that takes all assets. Your client does not have to be of retirement age. So unlike the Fannie Mae program that requires them to be of retirement age and they have to be retirement only assets amortized over 360 months, our asset depletion program will literally allow you to use any assets the borrower has amortized over 60 months, 60, and the client does not need to be of retirement age. We can use that to qualify by itself, or we can use that as supplemental income if they receive retirement income, if they've got W-2 jobs with a chunk of money sitting in a brokerage account. We can combine that. It allows us to really expand the qualification for your customer. It's an excellent resource to keep in mind, and we do a large volume of business on that product. Any questions on the non-QM? Loan amounts to 3.5 million, up to 90% LTV, credit scores down to a 660. ADUs are acceptable. We actually have a product that will accept multiple ADUs combined with a single family residence. So we give you some flexibility with the property. We've got some expanded non-warrantable condo guides that also pair with our non-QM products. But no matter what your income documentation situation is for your client, please give us a call. We can certainly help you with this. On the subject of expanded income parameters, we've got a great DSCR program. We allow you to lend in 35 additional states because we consider this a business purpose loan. It doesn't require the same NMLS licensing. Pricing is excellent, and we're running specials right now where you've got an additional 5/8 price improvement, no employment, no income documentation whatsoever outside of the rental agreement for the subject property only. And we get very aggressive on our DSCR programs. From a DSCR calculation standpoint, we've got coverage options that are greater than 1, where we give you price enhancements at 1.25 plus or 1.5 plus. But we also give you the flexibility of a no ratio, where literally we calculate it down to a 0.01% coverage, which means on a $1,000 PITI payment, you need rental income of $1, which effectively means it is a true no ratio program. Credit scores go down to 620, LTVs up to 85%. And get this, guys, we allow first-time investors, but we also allow first-time home buyers. So a DSCR program for somebody that does not currently own a home. We allow gift funds on the DSCR. Again, I allow multiple ADUs, rental income from the ADUs. We have interest only in 40-year terms available, and we use that lower payment to calculate your DSCR. You can use cash out to satisfy reserve requirements. Basically, we can slam these DSCR programs for you very quickly. Any questions on non-QM, DSCR, anything you'd like to touch base on? Okay, everybody's being real quiet today. We've got to, we don't want to start picking on people to force something along, but any questions, guys? It's much more fun when we get some interaction. Okay, we've touched on conventional, FHA, non-QM, DSCR. We are going to touch on a new program that we've just rolled out, and then how we have some ancillary products that roll well with that. New program that was rolled out, Titan MD. It is a doctor program. This doctor program offers 100% financing, up to $2 million loan amounts, no mortgage insurance. It's an amazing product designed for medical doctors. available purchase and rate and term down to 680 credit score, primary residence only, single family, which includes condos, PUDs, but single unit only. Minimum LTV is 90.1%. So they can't put more than 10% down and qualify for this program. It's available fixed and ARMs. It uses future income. So for those residents who've signed a contract with the hospital but don't start for several months, I can use future income out up to 150 days, which is exceptional. For those residents that have student loans in forbearance or deferment, we will omit student loan debt entirely, which could save thousands of dollars in monthly payment. We allow you to use non-occupant co-signers on this program if we need to. And literally the reserve requirement is as low as 0, maximum of 6 months. If your LTV is at 95%, loan amount below 1.5, literally no reserves required on this program whatsoever. And any money that needs to be brought into close can be gift funds. If the LTV is above 90, loan amounts above 1.5, we need 6 months reserves. And again, your reserves can be gift. It is an exceptional product. It will absolutely get your phone to ring. But what happens when your phone rings is you may get some seasoned doctors that want to put more than 10% down. And if that's the case, we have got exceptional jumbo programs. Jumbo product that goes to 90% LTV, loan amounts up to 3.5 million, multiple qualification opportunities. Second home, non-owner units available on our jumbo product, which is very atypical. We use RSU income if they're getting any kind of residual or restricted stock unit awards. And I've got multiple qualification opportunities. We've got some AUS-driven jumbo programs. The AUS-driven jumbo literally follows DU or LP when it comes to income documentation, but equally important when it comes to reserves. We just closed a transaction where literally we needed to fund a jumbo loan. Borrower had no reserves. We ran AUS, got an approved ineligible because the loan amount was too high, and we were able to get that deal closed well over $1 million, no reserves, with exceptional jumbo pricing. I've got some of the best jumbo pricing in the industry. You're also going to get borrowers that call you on the medical program that are nurse practitioners, medical assistants, nurses, and they're not eligible because they have to be a doctor to be eligible for this product. But for those nurses that call looking for 100% financing, we have got an exceptional down payment assistance program. Credit scores down to 600. I've got options FHA, USDA, and conventional. The buyer doesn't need to be a first-time home buyer. I've got no income limits. The use of non-occupant co-signers is allowed. We follow AUS on the DPA, so you could go up to a 47 front end, 57 back end if we're going FHA. If we're going conventional on the down payment assistance, you could literally go up to a 50% DTI. On the government loans, we do manual underwrites. We'll do FHA spot approvals on the down payment assistance. We can offer DPA on conforming as well as high balance. Fully delegated on this. We close these in 2 weeks or less on a regular basis. We're very quick and efficient. And another key point, we'll still take permanent as well as non-permanent resident aliens on our down payment assistance. FHA has eliminated the opportunity to do down payment assistance for non-permanent resident aliens, but because we offer this conventional, it is still available. We offer repayable seconds, which will net your client upwards of 3 to 4% in lender credit. So when combined with down payment assistance, you can get your client upwards of 7.5% in total assistance. I've got forgivable product, which is a recorded lien that is a silent second, forgiven after 3 to 5 years. And we've got an amazing DPA option where it is literally a grant that is forgiven at the close of escrow. And if that grant is forgiven at the close of escrow, literally it's free money given to your client, no recorded second. It's the only DPA product available in the marketplace that after 6 payments, your client would be able to refinance and take advantage of the lowest market rate available. If you bring that loan back to us, we waive your underwriting fee. We net your impound account because we'll be servicing that loan. But when it comes down to that medical program, when you advertise that, it will bring in a lot of ancillary additional business, and we'll be able to place that on a jumbo product, DPA program, and really help you find a home for that client. So that was, in a very quick period of time, a quick run through of our entire platform of loan programs. Let me open it up for any questions that you guys might have. We could do a deeper dive. We could walk through some pricing, whatever you want to take a look at. Anything, guys, that we can help you with?
I have a question. Sorry.
First, I insist.
Marisol, Edgar, thank you for being a gentleman. I wouldn't expect anything less.
Thank you. For as far as the down payment assistance program you mentioned, that's not specifically for nurses, correct? That's just if nurses want to are interested in the doctor program, but they're not eligible for it, then we can offer them the down payment assistance.
Exactly. Now we do so our DPA is available to everyone. However, there is a really unique pocket of borrowers where if they are in the medical field, they would benefit from that. So on our grant program, the program forgiven at the close of escrow, you're not required to be a first-time home buyer. If you are a first-time home buyer, there's no income limit whatsoever. If you're not a first-time home buyer, then there's an income limit of 160% of the county AMI. However, if your buyer is a medical professional, first responder, educator, veteran, civil servant, or they're in an underserved census tract, they're exempt from income limits, even if they're not a first-time home buyer. So again, very rare that we end up with somebody that's in that unique situation. For the most part, Marisol, what we'd be looking at is our DPA is available for everyone. But you will see that when you advertise the medical professional program, the doctor program, you're going to get a lot of inquiries from people that are not necessarily doctors that would not be eligible for that. And this is the perfect alternative for them. Edgar,
Thank you.
I'm sorry, Marisol, yes.
No, thank you for that.
Okay, you're welcome. And our pricing is literally, we wrote the guides, we underwrite the product. It is our proprietary program. I have got the best down payment assistance pricing available in the country. Edgar.
JT, I just had a question really, just like a general, I guess, how you break it down. We've closed a couple of down payment assistance, you and I, but I still don't know how to really navigate when somebody, I meet a client at open house, let's say, and they're interested in down payment assistance, and I know that they have, a bunch of options at their disposal if we go with you. So how do I narrow it down? How do I simplify it? How, like, if I bring somebody to you, what are things that like you try to right off the bat ask so that way, you know what, based on this, I would probably go this route and do the forgivable one, or, based on what you said here, I would rather do the one that you pay back for these reasons.
Edgar, that is a fantastic question. And it's a stumbling block that a lot of LOs have, especially when you've got to try to put together a decision very quickly. Todd, would you please pull up an FHA DPA pricing scenario, $500,000 sales price, 680 credit score, 57% DTI. So what we're going to run is pricing. And it's going to be on a real situation, not some fantastic make-believe 780 credit score borrower. So the question Edgar had is, when you look at, and Todd, I'm 57 here. If you can make that a little bigger for me, I don't want to get too close to the screen. We've got multiple DPA options. The question is, which one is the best fit for a particular buyer? And I know Edgar is a hustler. This guy is at open houses all the time, pushing this product. So somebody comes in and says, hey, I'm interested in down payment assistance. Which path do we look at? And to me, the fundamental question is closing costs. So I've got repayable, forgivable, grant program. If I have a grant forgiven at the close of escrow, why would anyone want a repayable product? And again, we can really narrow that down to kind of a fundamental question of down payment assistance and closing costs. So as we look at this, I'll give you some parameters. Regardless of the sales price, regardless of where you're located geographically, we believe it takes roughly 4 to 5% to close escrow between title, escrow, prepaids, loan officer compensation. Now, if you've got a buyer that walks in and says, I've got $15,000 or $20,000, or I can get a gift, that gives us some flexibility, because if they're looking at a $500,000 purchase, we need $20,000 to $25,000 to close escrow. If they've got a big chunk of that money, I would definitely be looking at the grant program. Or Edgar, if you're looking at a situation where they're buying in the high desert and homes have been sitting on the market for the last 45 to 60 days and seller credit is available, that's a situation where you can go put them in asking for seller credit. So Todd, which program are we looking at here? You're moving a little too quick. So let's go down. Let's start with what I think is the best product. Would you please scroll down to the grant program? So this is our 3.5% grant. This is 3.5%, the entire down payment, literally forgiven at the close of escrow. It's free money. There's no recorded second. It is the only FHA-driven down payment assistance program available in the marketplace that you can streamline after 6 payments. And if you look at the pricing, the sweet spot on this program is 7.25. 7.25% is coming. This is borrower paid. Is it a 0.24? Let's just call it a quarter point cost. It's going to cost your borrower about $1,000 to get this loan. Now, that means it's going to cost them $1,000. To me, this is the best program available. I would love to put every borrower on it, but that means we need to come up with that 4 to 5% outside of my lender credit. So I've got to come up with either borrower funds, gift funds, or seller credit to cover that money. That's the disadvantage to this program. No lender credit. It literally is fantastic. It's free money forgiven at the close, but we've got to come up with the entire down pay, or the entire amount of closing costs. Todd, if you would scroll up to the forgivable product, this is kind of that mid-range program. This is a product that is a silent second, but there is a recorded lien. The second is forgiven after 60 on-time payments on the first mortgage, which locks your payment, handcuffs them to this higher interest rate mortgage for the next 5 years. I'm not a big fan of it because it wants to lock them into this higher interest rate for a long period of time. Most of these buyers aren't going to keep this loan. If they end up refinancing and paying off the second, they pay it off in full, and they've lost the advantage of it being forgiven. But what you're going to see is when you get into that 6.99% interest rate to 7.25, there is some lender credit available, which will help with closing costs. Todd, if you would please scroll up to the repayable product. So Edgar, when you get a buyer that comes in, and we seem to get a lot of these, it's expensive being in Southern California. A couple making $120,000 a year, quite frankly, is probably living paycheck to paycheck, and it's very difficult to save money. Edgar, do you have a question, sir?
No, sir.
Okay. So for the buyer that comes in and says, I've got $5,000 or $10,000 saved, I'm looking to buy a $500,000 house. They've got 1 to 2%. You've either got to go get them another 2 to 3% seller credit. And in some cases, we get these buyers that come in and they unexpectedly are in the market to purchase a home. We just closed a transaction literally where the buyer was served a 60-day notice from his landlord, decided he wanted to try to buy a house instead of continuing to rent, reached out to several realtors and loan officers. They all told him they couldn't help him. This was why. The borrower literally had $3,000 saved up in his bank account. That was it. That was the extent of the assets they had. No 401k, no rich family member that was able to give them a gift. He borrowed $2,000 to be able to come up with his EMD, and literally found a loan officer on Instagram who was advertising this product. And he was able to structure the deal. We ended up closing escrow on that transaction, and we ended up refunding the EMD back to the borrower. And this is how. If you look at my repayable product, which is a recorded second, they do make a payment on the second. However, for borrowers that are very limited with the amount of money that they have. What you'll see here, I've got a whole rate stack. Rates go down to 6.25% at a slight cost. Once we get to 6.625%, I'm paying a 1.1% lender credit. At 6.875, we're paying roughly 2.5% in lender credit. At 7.25, we're paying 3.7% in lender credit. That is in addition to covering the entire down payment. So what that means is, if you were to take this boost repayable second, give them a 7.25% interest rate, it would cover their entire down payment plus giving your client in excess of $16,000 to help with closing costs. So when we're looking at needing 4 to 5%, I can literally cover 3.7% of that with lender credit on this program. If your borrower had literally no money at all, and you could go get them at 1.5% seller credit, we could close escrow and refund the EMD. We've literally recently closed transactions where we refunded the EMD, refunded the cost of the appraisal, and prepaid HOA dues. So, Edgar, the answer to your question is simply understanding that I've got 3 different pricing tiers. So depending on what your borrower has available to contribute to closing costs, combined with what you could get for seller credit, depending on the specific market that your client is looking in, would really determine which program might be the best. If it was the initial conversation, I would probably give them a very broad answer of, I have multiple products. So depending on what your specific situation is, I have something that would be repayable, I've got forgivable, and I've got money that's literally a grant forgiven at the close of escrow. Did that articulate how you could respond to a customer that walks into an open house?
Yep. Appreciate it, Jason. That made a lot of sense. That helped a lot.
Okay, you got it, sir. Thank you very much. Thank you for your ongoing partnership. Guys, any other questions on the down payment assistance or any other program that we offer?
Yes, Jason, appreciate your time. This is Tamer from Loan Factory. So let me give a real scenario and find out exactly how we can have a real scenario for that borrower. So it's a physician. They are actually have a credit score of 830. They are looking for $1 million home. It would be their primary residence. And they are actually having a previous physician loan on their current home that they are planning to use it as investment. So what kind of benefit we can represent for them with the program?
How much? Okay, so thank you for giving us clear detail on that scenario. What is the amount? How much are they looking to put down?
Frankly speaking, with physician loan, they are looking for 0 down.
Perfect. Okay, I just wanted to make sure. Todd, would you please pull up pricing? 100%, $1 million sales price, 830 credit score. So we'll show you what that pricing looks like. But the advantage to this is very simple. We could go 100% financing up to $1 million. We could use, they could keep the property they currently have, keep it as a retained property. We could use any rental income received from that transaction or from that property to offset the payment. We wouldn't give them positive cash flow, but they could offset with that. And Todd's going to pull up.
Is that correct? 830 as their credit score?
Yes,
I have it priced as a 750. I'm not sure there's another adjustment.
Okay.
Happy to hit the button.
So we're going to run that, but yeah, obviously the advantage to using another physician program is 0 down, no mortgage insurance.
My question, Jason, you still hear me?
Yep, I can hear you.
So they have income of $32K a month, and all of their liabilities is $60K a month. So I don't think even we will need that kind of rental income. So there is anything from that kind of giving them credit to help with closing costs. There is anything with a program that we can advertise for them with that situation that we can help them for closing costs?
Well, I'm going to be honest. This physician program has a very narrow bandwidth with respect to pricing. Todd pulled it up. This is the entire rate stack. You'll see that pricing only ranges from 7.375 to 7.875. We've got a half a point variance. We range from a slight cost to a slight credit. The maximum credit available is roughly three-quarters of a point. So in this case, you're going to be limited with seller credit or with credit toward closing costs, and this is borrower paid pricing. You can, however, request seller credit to help cover the closing costs.
True. Got you. Excellent. I appreciate you.
Okay, and thank you for letting us run that scenario for you. Thank you for joining the call.
Thank you.
You got it. Okay, guys, any other questions that we can answer for you?
Jason, do I remember you saying that the minimum FICO to use most of these is 600?
So the minimum FICO to use for the down payment, so I'll just address it. So minimum credit score for the doctor program, 680. Minimum credit score for 100% financing within the doctor program is 720. Our down payment assistance programs go down to a 600, but some of the enhanced products like the grant program, for example, and some of the better priced programs kick in at 640. But we do have DPA available down to a 600 that, again, FHA follows the 4001, no overlays. It's still priced competitively, but my best case exceptional pricing starts at 640. All of our non-QM bank statement P&L, 680 minimum credit score, although I'm sorry, 660, the P&L does require a 680. But Judy, was there a specific product you were asking about so we could make sure to address that one?
You covered it.
Awesome. Okay, guys, what else do we have?
Okay, I'll go again.
Thank you, Judy.
So I tried to get the MD flyer the other day,
Okay.
and I was not successful, so I don't know if, I mean, I was signed in through the STAR portal, but it would just never take me anywhere.
Okay. And I love it when I get great news. You know, I got 3 screens up. We're focused here on our training, and I'm seeing things pop up ancillary saying condition cleared, and it was a weird, crazy condition. And so I just got to text somebody really quick. So when you log in, Judy, you see where Todd took you in. It's going to basically, Todd moves very quickly. We got to slow down. So you're going to go in. Where you're going to locate this is in the search bar. A lot of people type doctor, but this is labeled as our Titan MD. So if you go into the quick search bar and type in MD, that's where it should populate these 2 flyers and pull them up for you.
So how did he get here? I mean,
okay, let's go back to the home screen, Todd.
Yeah.
Todd is our tech guy, and he is incredibly effective. So we're going to walk you through this. First thing, go to the upper right. Judy, are you trying to do this right now as we're walking through it?
No, I'm not.
Okay, so when you log in on the home screen, upper right-hand corner, you'll see where it says marketing. Hit the drop down.
That might be the problem I had then. I actually pulled up the products.
Okay,
and
yes.
On the product page, there's a flyer tab and it didn't work, so.
Go into the marketing studio. So marketing, then click on marketing, star marketing studio. It will then give you the pop-up, click enter now. And then it's going to take you into your marketing dashboard, which is through the STAR portal, but it's kind of an ancillary function. And from the Star Marketing Portal dashboard, just go into the quick search and type in MD, and it will absolutely get you to a social media flyer as well as a flyer that you could create as a PDF.
Great. Thanks. It
You're
was just
welcome.
user error.
That was a great question.
Just user error.
90% of life is user errors, but you know what? We do it plenty. So we're very patient with that. All right, guys. Any other questions on any of our products, marketing, pricing, anything else we can help you with? All right, going once. Going twice. Judy, anything else we can help you with? All good? Okay, Edgar, Marisol, anything else you guys have? Nope. Okay, going 3 times. All right, guys, thank you for joining us. Hope you found some use and benefit to this. Feel free to reach out to Todd or myself if you have any questions, and we really value and appreciate the partnership and look forward to closing more loans with you. So thank you guys very much. Have a great day.
Thank you.
Bye-bye.